Oil is on everyone's mind. Prices up almost 20% in the past 3 days. Barclays estimates 1 million barrels of Libya's daily output may have been shut down. We're going to bring in Morgan Keegan analyst Roger Reed. Roger is a Bloomberg best. That means he's been one of the most accurate forecasters of the oil services industry. He got up early and joins us on the phone from Houston. And Roger, I want to go back to your forecast at the beginning of the year. You gave us 75 to 120 bucks. And the theme that you were writing about was it's all about demand. Clearly, we're looking at a different story right now. What's the narrative and how does that figure into your forecast now?
Sure. Well, when you give a range that wide, you're obviously looking for, things that are going to happen you can't predict. Last year, the Greek crisis put oil prices on the low side. This year, unrest across a major oil-producing region, North Africa, Middle East, puts oil on the upside. But if you look at the underlying aspects, while we say demand, demand last year was up over 3%. And, to us, that is the underlying narrative. That's why oil started this event, around $90 to $100 and is pushing to 110 to 120 now.
Do you see, we've obviously been talking about Libyan capacity. The Saudis have said they stand ready to kick in. We're also talking about a different quality of oil there. What do you read into what Saudi Arabia is saying?
Yeah, it's a double-edged sword if Saudi does commit their excess supplies, because part of what keeps oil, in check, or oil prices in check, is that you've got about 5 to 6 million barrels a day of excess capacity on a global basis, the majority of that in Saudi Arabia. So as they start to make up for shortfalls elsewhere, that spare capacity number drops, meaning your next problem could be a bigger problem for you. So kind of all that together, once you get to these lower levels of spare capacity, tends to push prices higher.
So for investors, then, does that make oil a more attractive commodity, or are we talking about something that becomes prohibitive here?
I think what you're looking at with crude right now is everything that you've heard about and the fear of some amount of unrest in Saudi Arabia is starting to get priced in. But if you actually talked about real disruptions in a major oil-producing country, Saudi Arabia, Iran, Kuwait, I think oil would definitely go higher than where it is right now.
All right, Roger, thank you so much for joining us. Oil, of course, on everybody's minds. Oil service analyst Morgan Keegan and a Bloomberg best.